One thing everybody loves and two things everybody hates. Death, taxes, and NFTs. Take it away.
Thanks. All right, don't leave. It's tax. Still fun. All right, thank you to those of you who stayed. Do I have control of the slides? Oh, that's me. Let's get rid of that. Oh, that's me, and I guess we're going to have to be stuck with that. All right. I'm going to ask you guys a quick question. How many of y'all are tax people? Because I want to measure this appropriately. I got one. Fantastic. So I can make up stuff, and only these two will know. So something very extraordinary happened in the NFT space about less than a month ago. First of all, extraordinary thing number one, the IRS issued guidance, actual guidance regarding the taxation of NFTs. Extraordinary thing. Second, and it wasn't bad. Extraordinary thing number two, and if you listen to the whole licensing discussion, this is an excellent follow-on because the guidance that they issued was thoughtful, meaningful, and invited comments from the community. All of which means everything I'm about to say for the balance of like the next 8 minutes are things that you can actually impact by commenting on and participating with the dialogue with the IRS, which is a pretty extraordinary thing. But the guidance that they issued fundamentally concluded the following. The NFT is the container. So when we think about NFTs, if we follow along the licensing discussions and 1,000 different discussions happening in these rooms and in the hallways, the discussion is always about the NFT, the digitally created blockchain asset, is distinguishable from the rights and the obligations of the thing that's being transferred. Now, in some cases, they may not be separately or separable. They may not be able to be transferred. They may not be able to be unteased, if you will. But the focus of the IRS guidance was the following. They said, and they described this as a factual matter. So if you disagree with everything I say, don't tell me, tell the IRS. They said, starting point number one, the NFT is the digital identifier. It tells you the where. It tells you it points to who, and it tells you in whose wallet it is. And they said the thing inside is the thing we're going to tax account for. The NFT is the container. The thing inside is the thing that we have to determine the tax consequences of. Now, the IRS guidance was issued in a very specific format and addressing a specific question, which is for some NFTs that grant you the right to say digital artwork. The question is that digital artwork subject to the higher rate of tax? It's called the collectibles rate, and it's a 28% rate. And so the entirety of the IRS guidance was focused on the limited question of, if I sell or buy the digital asset, do I look through and look at the digital art, and is it a collectible? Not all art is collectible. I make a lot of art. It is not collectible. In fact, I'd be willing to give away if anyone wants to catch up in the hallway. But similarly, if there are, a fine gem, gold, silver items that are not of a standardized fineness, you can think of an analogy to some of the the products out there that are gold assets that are underpinned. They're a digital asset, but underpinned by gold. And the IRS guidance was very simple, and they said two things. First, we look through to the underlying asset. If you use an NFT to give you the certificate of ownership over a real-life asset, we look at the nature of the underlying asset. And if you get something like digital artwork or similar, we will look at the underlying digital artwork to assess whether it is a collectible. So very simple conclusions, and then 3 pages of questions from the IRS, and I'm not joking. Question number 1, did we get it right? Is what's described in here factually accurate? And then, do you really think these are collectibles? Did you buy the stuff on the first 2 pages? What else should we issue guidance on in the NFT space? I mean, it's actually really great in the sense of, if you really want a dialogue with your regulator, which I know we do, it fostered the opening to have that dialogue. But there are knock-on consequences to the analysis that the IRS already provided. So the first is, if you happen to own digital art and you have whatever set of licensing that you have within it, you have to assess, if you sell it at a gain, do I get the benefit at the higher rate? Or putting it differently, do I pay tax at 20% or 28%? We'd all like it to be 20, and the IRS is suggesting in some cases it's 28 when you have a gain. Reverse that conversation in the case of a loss. The second is, what consequences does this have for other kinds of taxes? So when we talk about NFTs, the version that the IRS described is very simple. It's an everything but the canvas or digital file being transferred. It's a certificate of ownership. It is not getting into NFTs for gaming, where the thing inside the container may be something that is software as a service. It's not getting into NFTs for other use cases where you might be able to stake the NFT and receive periodic income. And it's not getting into where the NFT space may evolve to, which is everything from, if you follow tokenized liquidity pools that use NFT technology to support them, and everything in between. And there's 3 reasons fundamentally that I care about this as a tax person. First of all, I care very much about the concept of what it is that's being transferred, because that's going to drive 100% of my tax consequences. And that's true for the brands that I work with, the creators that I work with, the royalties that I help structure, and everything in between. And so if you are trying to figure out, do I owe state sales and use tax? Which, by the way, at least 4 states and counting have said absolutely, if you transfer an NFT, you owe state sales and use tax. Do I owe outside the US value-added taxes or goods and services taxes? So are there taxes that you, either as a platform, as a creator, if you're a brand facilitating transfers, if you run a marketplace, are you going to be responsible for emitting taxes and, more importantly, holding that back from proceeds when there are sales? If this is a container, then I look inside the container to figure out would I have owed these taxes when there was a transfer. Do I have to withhold on things that look more like income items? We can have a healthy debate on the treatment of creator royalties. I'll set that to the side. But do I have things like the ability to stake, or a lot of dynamic NFTs have the ability to grow, to change, to morph? Are those things that would trigger the potential for what we call an accession to wealth, which is a taxable situation? Do I have the kind of reporting obligation? So if you get your tax advice off Twitter, which I certainly do, there's a lot of discourse, and has been a lot of discourse, about the change in the reporting rules for both digital assets and for selling real stuff. When you sell something and it has a value, make sales for greater than $600, there are new reporting obligations, now deferred 1 year, becoming effective for 2024. Similarly, there's all sorts of new legislation that came out regarding the reporting on digital assets and the reporting on transfers when I use a digital asset to pay for something else. And this is where the Twitterverse exploded, where there was like, oh my gosh, this comes with civil and criminal penalties. Nobody wants to go to jail because of taxes. I know I don't. That's how they got Al Capone. So, possibly Trump. Having a footprint where now we know that the IRS's view, not surprisingly, is that the NFT as the container allows us to do the exercise that we were already doing, which is looking at what is the nature of what you're creating for your audiences, and does your NFT architecture allow you to collect the data that you need to actually do the compliance that we're talking about? Do you have the ability to, I will say hold back proceeds where you have to make tax remittances so you're not on the hook, because either you have a transfer that's triggering an indirect tax, or I have a transfer in which there's a requirement to withhold? And do I have the ability from a manpower, business partner standpoint, and otherwise, to be compliant with my reporting obligations? And I'll leave you on this note. I'm hoping that this has mostly been somewhat helpful and that the IRS has not settled in their view and you can come back and engage with them. It's been a little bit inspiring because you're like, damn, taxes are interesting. I got to go read up on this. And third, the IRS on their side has invested, they got $80 billion, right? And they're not going to spend it all in one place, but they've invested a huge amount of resources on the auditing of digital asset transactions, and the NFT world is part of that. And that auditing can manifest by use of on-chain transaction to try to trace where there are transfers and look back to say, where is there misreporting? Where is there income where there should have been? And second, they've created a task force on the commissioner side between the technology folks and, frankly, their criminal investigations team to try to roll forward the types of audits that they used to do through what was called the Voluntary Compliance Initiative. I don't know, y'all are young and fabulous. You might not remember a few years ago where the IRS sent out letters to like 10,000 people and they said, hi, we noticed you did something with digital assets. We'd like to remind you that you really should pay your taxes. And since I sent this to your home, I know where you live, so you really should pay your taxes. They're now enabling that at scale with technology. So if you think about the reverse, which is I don't like to ask a question unless I know the answer. If you know the IRS is collecting certain information, you want to know that you know what that information is so that you can figure out, have I dispatched all of my tax obligations in the way in which the IRS will see that data coming across, or do I have the documentation to explain why what the IRS is getting is inaccurate? Think about it. You've received a 1099 for, let's say, goods, services, stuff, and it's not been accurate. You run into the same thing here. And so I'll leave you with the fundamental thought that if the IRS has concluded that the NFT is the container, now you got to figure out what's in the container, because that's what counts. And maybe, get a friend to help. It's just about tax day. Have a good one. Thank you.
Thank you.